Welcome back. You're still tuned into Midcap Radar on CNBC TV 18. Uflex is the stock on our radar. Company's arm Flex Asepto has decided to set up an aseptic packaging facility at Egypt with an investment of approximately $126 million. Do note the company has around 463 million rupees of the capex upcoming in FY25. To discuss this and more, we have Rajesh Bhatia, the Group President CFO at the company, joining in now. Mr. Bhatia, good afternoon. Thank you so much for joining in. Just some more details on this capex that you've announced. By when do you plan to commercialize it? What is the asset turn expected here? How will you be funding this capex?
So we are looking at commissioning this by third quarter of FY26, and we're going to spend about $126 odd million, mix of debt and equity. Largely debt, I can say about 1/3 equity and 2/3 of debt. And, like our aseptic packaging business here in India, which we are expanding to 12 billion packs a year, this facility would be 12 billion packs a year. And gradually, I think we are looking to ramp up the capacity utilization at this plant to about to the full capacity. But, these are new territories for us. Obviously, when we started in India as well, it took time for us to penetrate. So these are the markets which we are looking at currently, the local market in Egypt and the European market. And given that Egypt has an advantage to export to Europe in terms of the duty. So there is no duty when you export from Egypt into Europe. And obviously, the big market here is the Europe, which we are eyeing. And it's a natural, sort of expansion of our existing aseptic packaging business from India to take it to global, as we had done earlier with our packaging films business many years ago.
Mr. Bhatia, you've given us the rationale. You've indicated that, this particular plant at Egypt will look to go ahead and cater to the European market. In terms of broad numbers, what is it that you could share in terms of the opportunity size that you see as far as the European market is concerned? You said that you're expecting it in the second half of FY26. So when can this particular facility start kicking into your own financials? And what would be the kind of opportunity that you're looking at?
I think we will, a 12 billion packs overall, you will look at about $150 million odd dollars top line. And EBITDA margins, difficult to say at this point in time, but we expect about better EBITDA margin than what we have in the packaging films business. And obviously, this is one business which we are now planning to take global, given our success here. From India also, as we speak today, there's 70% what is sold in India from our Indian plant, and about 30% is what is exported, which is today to Southeast Asia, as well as to a little bit to Nigeria, and then to Middle East. But this particular facility will largely look to supply to Europe and Egyptian, slightly African markets as well. So I think we'll have to keep a longer time frame as to when we reach our 12 billion capacity on this. And we'll be progressively, keep on informing about the capacity utilization of this plant. But I think this will take some time. Like, if I were to say in India, how did we go from 3.5 billion packs to about 12 billion packs, which we're going to commission by the end of this year? So it's a 6-year kind of a journey. So hopefully we can replicate this in that plant as well.
All right. Mr. Bhatia, if you can also talk up to us about your PET chip plan. It was to be commercialized in Q3 FY25. Is that on track? Will that start contributing to revenues in FY25 itself? And in that case, what kind of volume growth, realization growth are you expecting in FY25 with the margin number as well?
So this number for the PET chips, I think we are largely thinking of utilizing it for our internal consumption in Egypt, in Europe, in Poland plant, in Nigeria and in Dubai plant, and if required in our Mexican facility. So this facility is largely captive, and so initially, when we look to substitute our outsourced raw material for our BOPET films plant with this, I think we're looking to only the margin expansion with this business, which may be anywhere between 1.5 to 2% range for in the packaging.
Mr. Bhatia, give us a sense directionally how Q2 panned out. Number one, demand. How did raw material prices pan out over there? And how are the spreads as far as the BOPT as well as the BOPP when you're comparing it on a sequential basis?
So I think definitely much better than what we had in Q2 of the last year. And clearly the Q1 set the pace for that. We already, the numbers for Q1 are already announced. And Q2, as I had said earlier as well, that, if we look at the Q1, the substantial quantum of the price increase came into being after the first fortnight of June, which means that it will have a full impact of the this quarter will have a full impact. Having said that, thereafter the BOPET prices went down a bit, they came up again, so there has been a bit of sort of up and down kind of a momentum, but the PET prices are quite reasonably stable, so the margins are definitely going to be better than what we had in the Q2 of last year as well as in Q1 of the current year.
Okay, yes, and the stock price also shows that these stocks have recovered, the packaging, film space, and yours as well. Thank you so much, Mr. Bhatia, for joining in and giving us all those details. So looking very positive on the new capex that the company has announced. By the way, the markets have slipped further. It's a 300-point cut that we're looking at on the Nifty, very close to that 24,700 mark. At the day's low, the mid-cap index also is down further. It's a 2.3% cut. When we started the show, we were down around 2.1. So watch out for that one. There's a continuous slide from the top as well. But as we slip into a break, here is some good news for you, our viewers. India's business news leader is now click away, introducing CNBC TV 18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV 18 app now from the Apple Store or Google Play Store.